Hello everyone, welcome to my channel. It's me Bhavana Jain. Today I'm going to explain you the section 194Q and this section is really very important from the CA final exam point of view also, and this section is really very important from the practical point of view also. And don't worry guys, I'm going to explain you this section in simple language. I will try to explain you this in very simple language, and I'm not going to use any the legal terms and all. And this is my first YouTube video where I'm explaining the section of direct tax. So let's get started. 194Q is applicable for buyer of goods. No, 194Q in the 94Q section, the two conditions you have to meet. 194Q is applicable to buyers who meet the following condition. There are two conditions. One is turnover threshold and second is purchase threshold. First is turnover threshold. The buyer total sales turnover or gross receipts from the business and exceed 10 crore in the preceding financial year. That means the buyer who is going to deduct TDS, that buyer sale must cross 10 crore in the previous financial year. In the previous financial year, the buyer turnover must cross 10 crore. And the second condition is the purchase threshold. The buyer should purchase goods of worth more than 50 lakh. In the current financial year, the buyer have to purchase of goods more than 50 lakh. If the two conditions are going to meet, then only this section is going to be applicable. Suppose, for example, in the current financial year, the buyer purchased goods more than 50 lakh, but his turnover is not crossing more than 10 crore in the previous financial year, then this section is not going to become applicable. Second is 194Q TDS deduction. The buyer is required to deduct TDS at 0.1% on the amount exceeding 50 lakh. Now at what percentage the buyer is going to deduct TDS? At a very 0.1%. And on what amount that exceeds 50 lakh. Suppose your purchase is of 60 lakh, then on 10 lakh the buyer is going to deduct TDS, and if the seller does not provide the PAN, then the TDS rate will be 5%. Second thing I mentioned, you have to deduct TDS, but at what time you are going to deduct TDS? At the time of payment or credit in the books of account, whichever is earlier. Okay guys, TDS is deducted at a time of payment or credit, whichever is earlier. Now the next is 194Q is not applicable if the TDS has already been deducted under any other provision. Then 194Q is not applicable. Second is very important, if TCS is collectible under section 206C, then 194Q is not going to become applicable. Third is, if both the section is becoming applicable, 206C, 1H and 194Q, then who is going to win? 194Q is going to win. 194Q will override 206C, 1H. This is very important. If TCS is collectible under section 206C, then 206C the seller is going to collect TCS over that only. But if 206C, 1H and 194Q both are becoming applicable, then 194Q then buyer is going to deduct TDS under 194Q. This is very very important. Third is, if the buyer in India purchase goods from NR seller, and if that NR does not have a permanent establishment in India, then this section is not going to become applicable. The buyer in India purchased goods from NR seller and that seller does not have fixed place of business FEP in India, then this section is not going to become applicable. Now next, can the government department be a buyer? Can the government department be buyer? Now see, if the department is carrying out the business and commercial activities, yes, the department can be considered as buyer. If the department is carrying out the business and commercial activities, yes, they will be considered as buyer for this section, provided the turnover cross in the previous financial year 10 crore. And if the department is not carrying out any business or commercial activities, then department is not considered as buyer for this section. Okay guys, this is very simple, and I think this is clear to you. Now next is, can the government department be a seller? You just imagine by yourself, can the government department be a seller? Are you able to deduct TDS of the government department? you are going to pay the TDS to the government only. Now can you deduct the TDS of the government? It's very logical, guys. No, the central and state government department is not considered as seller for the purpose of section 194/94Q. Now these things in your ICI material also, this has been written कि PSU or PSU are treated separately. Unlike government department, PSU or corporations established under central state laws are treated differently. These entities are required to comply with section 194Q. They are required to comply with section 194Q. If the terms and conditions are meeting, then PSU have to comply this section. That means PSU have to comply this section. PSU means your ONGC, BEL. These all are the PSUs. Now another is newly incorporated companies. Newly incorporated companies. Now for this section 194Q does not apply in the year of incorporation. That is very logical also. For newly companies, they don't have their turnover in the previous financial year, they don't have any turnover. Okay, then how this section is going to become applicable? This section itself says that in the previous financial year you have to have a turnover of 10 crore. For new companies, this section is not going to become applicable. Section 194Q does not apply in the year of incorporation, as there is no preceding financial year turnover to evaluate. However, this section may apply for the subsequent years. This section is going to apply. Okay, guys. For new companies, this section is not going to become applicable, as you know they don't have turnover of 10 crore in the previous financial year. This section is not going to applicable. Yes, for the subsequent years, for new this section will applicable. This section will become applicable provided the terms and conditions are meeting. Now next, the GST adjustment. What about the GST adjustment now? Now next, the GST adjustment. If the invoice shows GST separately, then TDS should not be deducted on the GST amount. That means you have to deduct TDS excluding GST if the GST has been shown separately, mentioned separately in the invoice. This applies to all forms of GST, IGST, CGST, SGST and UTGST. Now you have two cases. If the TDS is deducted at the time of credit, if TDS has been deducted at the time of credit, and if the GST amount has been mentioned separately, then it's very simple. You don't have to deduct TDS on the GST amount. You have to deduct TDS excluding GST. But TDS on payment basis. Now understand this, guys. Very now understand this. Very logical. If the payment is done earlier than credit. Okay, guys. If the payment is being done earlier and the invoice is going to be prepared on the future, then at this moment, how you are going to identify the GST amount? Is it possible for you to identify GST amount? And no, very logical. This it is not possible for you to identify the GST amount whose invoice is going to be prepared on the future date, right? So at this case, you have to deduct TDS including GST. You have to deduct TDS on the whole amount, because it is not possible for you to identify GST component here, because the invoice is going to be prepared on the future, and if the payment is being earlier, then obviously it is not possible for you to identify what is GST component here. You have to deduct TDS on the whole amount. On the whole amount, you need to deduct TDS. If the TDS is deducted at the time of payment, TDS is deducted under entire amount paid including taxes, because it is difficult to separate GST component at this stage, because your invoice is going to be prepared on the future, and before credit the payment is being done, then obviously it is not possible for you to identify what is the GST component, so you have to deduct TDS on the whole amount. Okay, guys, I think this is very much clear to you. Now next is purchase returns. What happen if you have done purchase and you have returned the goods back to seller? Then if the seller refund you money, then the TDS will be adjusted on the next purchase. If goods are returned and seller refunds the money, TDS already deducted for the returned goods can be adjusted against next purchase. Obviously you have to adjust your TDS on the next purchase if the seller is giving you money, but if the seller is replacing you with the goods, then there is no adjustment required. It's very logical. And thank you everyone for watching this video. Thank you so much.